Welcome to your September mortgage and real estate update. If you're new to the channel, I'm a mortgage lender licensed in 48 states. My team's one of the top purchase teams in America. So when I'm talking about what I'm seeing. Now, look, the first thing that I'm seeing right now is it feels like a lot of people don't realize how much rates have dropped. You know, I'm still hearing, oh, well, I'm hoping rates will come down. And then I'll say, hey, we're at XYZ. And they'll go, what? And I'm like, yeah, like rates have already come down. Okay, so that's the first thing. If you're a buyer and you're like, oh, I'm waiting, check in with your lender, see where rates are, because I'm telling you, like, if you guys follow me on Instagram, you've probably seen it, but I was like posting like where rates were in October of last year versus now. It's crazy. It's crazy, right? And you know, a lot of times people are going, oh, okay, well, that sounds really good that they're low, but the Fed's supposed to cut rates in a week or two, right? Okay, so here's what you need to know about mortgages. Whether you're thinking of refinancing or you're thinking of buying, the Fed cutting rates does not directly impact mortgages, okay? Mortgages are priced off of a variety of factors. The Fed's cutting short-term rates if they cut, right? But with mortgage lenders, we're forecasting. So like for instance, the rates that I'm offering right now are based off of what we think the Fed will do. And we think the Fed's gonna do a solid cut. Now, what happens if they don't? Rates are gonna go up. It's that simple, right? Like that's the thing. So you see a lot of this. You see that the market's constantly forecasting, constantly anticipating. And look, as long as they cut where we're all expecting them to cut, then the rates I'm offering now, they're gonna be pretty similar to what I offer on the 20th. If they do a much larger cut than what everyone's expecting, yes, my rates would go down further. If they don't cut as much as everyone's expecting, then my rates are gonna go up. If they don't cut at all, my rates are gonna go up, okay? It's just the way it's gonna work. And I think a lot of people aren't being educated on the fact that lenders are pricing this in way before the actual date, way before it, okay? And look, if there's news that starts coming out a couple days before the Fed meeting where they're saying, oh, it could be a bigger cut, you could see rates dip a little bit. Or if they say, oh, there's a good economic report, they may not cut, you're gonna see rates go up. So here's the approach that I've been taking with clients, whether they're refinancing or purchasing a home. If you like the rate, lock it. Okay, I don't like gambling, and I'm very thankful that we have a really good renegotiation policy. And whether you're buying or refinancing, you want to make sure that the lender you're working with has the ability to renegotiate the rate and does it a lot. Okay, I am the self-appointed queen of rate renegotiations. I love it. You know why I love it? There is nothing better than calling a client and saying, hey, yeah, you totally weren't paying attention to the market or anything else, and I was able to save you 0.5%, okay? And that's what we see in volatile markets, is we'll see swings sometimes where you can do these great savings. But as someone who's looking at a mortgage, you wanna know that the lender you're working with has a rate renegotiation policy and uses it, okay? Now look, are there fees? Yeah, look, the rates are gonna have to drop at least 0.25% from where I have you locked. We have a 0.375 fee for most of our programs. But the key is we have the ability to move if the market changes. So, you know, right now rates are great. Let's say you lock and rates go up. Okay, great, you already locked, you're safe. Let's say you lock and then rates drop dramatically. Cool, let's renegotiate. Right? And as a buyer or a borrower, you want to have that flexibility right now, because here's the thing. There's way too much volatility. There's too much uncertainty. You've got multiple wars going on right now. You have, you know, as we get closer and closer to the presidential election, you're going to see more and more, I don't want to say the word nonsense, but I think we're going to see a lot of nonsense pre-election that's going to start spinning the market out. And it's important that if you are gambling by not locking your rate as a purchaser, or if you're gambling, you know, because with refinances right now, like I'll see somewhere, I'm like, I can save you $500 a month. And they're like, I want to see what happens with that Fed meeting. And I'm like, that's fine. But as long as you understand, this is how we're pricing, this is the risk if we don't lock, great. As long as you guys are educated on your risks, I think that's okay if that's what you want to do. My fear is always, there's not a lot of education, right? And the last thing you want to do is turn down a good rate, turn down a good opportunity because you think it's going to get better, but then something flips it, okay? So really important that you guys are mindful of this. As we get closer to the presidential election, I think it's going to be chaotic. You know, it is interesting from a historical perspective. Last time Trump was elected in 2016, rates jumped 0.5%, almost overnight. And you can Google it, look it up. It's an interesting story about why mortgage rates jumped after he was elected. But, you know, would that happen again? I don't know. Does that mean anything about, you know, good or bad? No, it's just a statement, guys. It's something where I remember it because I was the one that had to call buyers and say, hey, like, I'm really sorry, but you now qualify for this because rates have jumped, okay? So really important you're mindful about all of that. In terms of like how many buyers we're seeing right now, look, it's totally normal. August, I would argue, is a slower month. It's a slower month. Kids are going back to school. Kids are going to college. It's hot. It's nice. It's pretty. People don't want to necessarily home shop. We're moving into the fall market now, and I think really seeing how people react to where rates are this month is going to be a good indicator of what's going on with the housing market. So, you know, same thing as usual. I've got some parts of the country where there's some great deals right now. You can get the seller to pay all your closing costs. Like, it's beautiful. I've got other parts of the country where people are paying $100,000 over and not getting the offer. So it depends on the market that you're in. The key is this. You need to be comfortable with whatever payment you do. You need to be comfortable if you're buying a house with the house you buy. Right now, I feel like most people don't realize how low rates are. I think it will be really interesting once everybody knows. So anyways, just a quick video, but I wanted to fill you in on what I'm seeing so that you could make a good decision on, do you lock, do you not lock, do you wait, do you not wait? Those are some of the variables to consider. Thanks for watching.